What's up, guys? Thanks for taking the time watching another video. Just gonna make it a simple, short one. Again, remember I'm starting at somewhat of a beginner level. The videos will get more advanced as we go, so if you're more advanced in these videos, hang in there and just keep checking in. But regardless, it's a good refresher to go over everything. So let's just do a real simple video. Um, Again, like I said, I'm not going to do some big production. My goal is just to offer real education. So um, typically, when I look at a pair just fresh, I get a big picture. So I'll start on the daily and get an overall picture of what's happening. But in this case, I'm just going to start on the hourly and just kind of show a method here. So here you can see there was a downtrend. Don't really need too many lines here. So we had a downtrend and price broke. So right now I'm thinking our downtrend swing is going to start a bigger swing back up. So first thing I like to do is mark some higher levels up here. And then kind of look at what's happening here. So one thing I see for sure is we've got somewhat decent trend going up here. And don't focus so much on your trend lines being absolutely perfect. Rarely will they be. I know a lot of traders will post that they are, but you just want the general idea. So we are on the 1 hour time frame. So how do we look for trades? So I want to show an Elliott wave because there's clearly an Elliott wave here, but I'm not going to do that for now. So let's just say price just hit here, came up and hit there. So we've got a clear bottom, we've got a top area. You can go to your Fibonacci tools and measure from the bottom to the top in the direction that the market moved. And what I'm looking for here is price to pull back into the key Fibonacci levels, which for me is these three. So as price comes back, I'm looking to go long when the time is right. So price hit 0.5 here. Nothing really showing me much there. 0.618 is where I generally wait for the higher quality trades. So as you can see, price pulled back to 0.618. Let's get in closer there and see if there's a reason why we would enter there. Yes, there is. So we've got a clear double bottom with big rejection wicks right there. And so we basically got a W forming. So whenever I see double bottoms, triple bottoms, especially with long rejection wicks like this, it's pretty clear to me that's a good place to enter. So what I would do from here, and just remember, none of this has happened yet. So we're just looking at here. So I'm going to get ready to go long here. We've got one bottom there, comes back up, and we've got a second rejection. So I'm going to enter. I'm going to keep the stop loss below the double top. My first target is going to be the top of our previous swing high. So as you can see, that's 100 pips potential gain. And with my stop loss here, it's a 10 pip potential loss. So if you can find trades with that ratio and win half of them, you'll be a profitable trader. It's really no denying that. So as price did move up, you can see we got these big rejections right here. So you could have taken profit, but this is where Fib comes in again. So let me clear the screen a little bit. So we entered here and price went to here. So hit our target. So let's do this to see if we want to stay in this trade or close it in profit. So what we just did when entering this trade was looking at the pullback. So we're going to do that again. So price comes up here and it pulls back to 0.236. So technically it didn't break this previous high. So unless it broke that, I would stay in this trade and watch it go up. But the real key is marking your obvious levels of support and resistance. And it's going to be up to you how much you want to risk going for the extra pips. I mean, here, obviously it paid off. If you would have, paid off huge. But there's nothing wrong with taking 100 pip profit and reanalyzing again. Because no matter where you go, you can always measure fib. So you can see here it pulls back to 0.382. You can go long on that pullback. I mean, you can see, first of all, you can see price attempts numerous times, and it can't break below that. So that tells me immediately 0.382 is likely going to hold up. So there's two rules to entering. There's a conservative way, and there's the way I do it for less risk. So the conservative way to enter this would be to wait for price to move up and past your previous high, and some will wait for it to break above, retest, and move up. I enter, when I see all this, I'll enter down here with a tight stop loss again and target one full retrace. So low risk for a lot of pips. If you enter up here, you got to have a little bigger of a stop loss and a little less knowledge of your target hires. So yeah, I mean, that's really it. And then once we get up here, you can see a lot of resistance telling me obviously price is having a hard time pushing higher. So what I'll do in this situation is mark the neckline, which is where this isn't breaking through, and I'll enter short on the break of this level. So as you can see from this high here, the break of this would have been my first target. So going back down, you can do fib. Remember, fib starts goes in the direction of where the market's moving. So I measure from top to bottom. You can see it pulls back only to 0.236. So it would have been a little tougher to gauge, but as it tested here, kind of consolidates for a while. That's when I'll kind of look at potentially going long on a break of that, or just waiting for the break of this neckline and going short. So as it went short there, let's do one more. So we got a clear high, a clear low. And we get our 0.5, so we could have went short there. Our first target would have been these previous lows. So it's really kind of a low risk strategy. I'm sure it probably sounds confusing to some of you right now, but just remember, you may see a bigger uptrend, but within each trend and time frame, you could see different trends. So that's one big lesson all by itself to remember, is just perspective on time frames. So if you look at, we're on the hourly, if we went to the daily, you can see we've got that's just a little uptrend going on there at an overall downtrend. So price could easily pull way back down here. But the safer trades are always going to be near your big resistance and your big support levels. So let's stop this lesson now. Again, I know it was just basic, but I hope it helps, and if you practice it some, it'll help you for the next videos I post. Just be patient and know you're not going to learn all of this in a couple of videos. So I'm going to try to share videos strategically to help with the process. So hope you all come back and see me again.